Back guys, and as always, you're alive and blessed. So now in the previous video we already identified how to trade a candlestick for the market mechanics on a bearish market. Now what we're gonna do, guys, we're gonna do the opposite. As always, we're gonna trade it on the bullish market. Guys, everything I said in the previous video is the same thing I'm about to say, but just vice versa. So how? Because guys, you just don't want to know how to trade on a bullish market, or you just don't want to trade how the bearish market, because anyone could trade on a bullish market, anyone could trade on a bearish market. But guys, if you guys could trade on a bullish market and on a bearish market and in the consolidating with the supply and demand, guys, you guys will be financial free faster than I did. So let's get right into it, guys. Supply zone on top, as always. You guys see, you always gotta look for the highest. This way started the motion, right? So price from here eventually came back down. So price came back down to form a what? Lower low. It consolidated for a second. Guys, remember I always tell you guys the wick now. If this demand zone was not supposed to do its job, if this demand zone was not supposed to do its job, guys, this wick right here would have been full ass body, just green candlestick, and it would have break past this demand zone and continue forming lower highs, lower lows, and will continue going down. But guess what? Sellers got impatient and dumped the company, but buyers came back in and buy up all the euros and the USD dollars, right? Buyers right here came back in the market and say what? Nope, this demand zone is going to hold, because there's a lot of buying pressure on the bottom here that eventually pushed this market. But still, you guys just don't, because you guys see this, that doesn't mean it's an uptrend as yet. Price could have eventually came here and still came back down. But guess what? You guys see it, the market shift. Because why? This was the previous low. This low set off this whole entire market. So this was the last low. So we got, as we learned in all my videos, once price break the previous low, it lets you guys know the market shift from a bearish, now the market is in a bullish, right? So what you guys want to do now, wait for the pull back. Because like you said, every put, guys, you guys really need to know, understand, imprint two key concepts in you guys' head: market shift, break off structure. Those two, market is gonna always reverse every time a market shift happens. Guys, I just learned that by teaching you guys that price is gonna always retrace back to a market shift and a break off structure. So as you guys see here, price break off structure, and guess what it did? It came right back down to pull back. So guys, what you guys could have done, to be honest with you, wait for the pullback and enter here. But make sure now you just don't rush to the trade, because wait, this previous low, if this previous candlestick did break past this candlestick, it would have been in a downtrend. But this confirmed to let you guys know that the uptrend is certified, because it break past the market shift and price could have eventually came back down and created a new market shift, right? But this candlestick right here mimicked and respected this candlestick, because it didn't break past it. So once it didn't break past it, you guys wait on the pullback, enter the trade, your stop loss below this previous low, and then you ride to the next profit. The next take profit would have been the demand zone. Now, earlier I told you guys, if it's two candlesticks on the demand zone or support, that means it disrespected that area, right? So you guys see here, if price was to respect this and come back down to the demand zone, sellers from here would have dumped this fat ass candlestick right here, and it would have been more wick, and price would have continued coming down. But you guys see, buyers break past this support level. So at this point, this support level is worth shit. But it don't matter, because you took your profit at this supply level first, because price is going to always go to the first supply zone before go to the extreme supply zone, or it's going to go to the first demand zone before going to the extreme demand zone. So you guys see how price eventually went back up to touch what? The higher demand zone right here. So since price came back down, notice here now how price formed two candlesticks here. That let you guys know buying pressure still in the market. Vice versa here, guys. See, this the key. The candlestick never break past it. So once it never break past the extreme support, it lets you guys know market is about to come down. And to give you guys an extra confirmation, the candlestick after that is going to close below the wick. See on the support level, guys, how the candlestick closed right here, and on the demand zone it closed right there. It closed inside the demand zone, same as here inside the supply zone. And in here it just say, you know what, screw this supply zone and disrespect to this. So also what you guys could have done now was put your short below there, guys. It's just, oh my god, I really hope this guys, at this point, after watching mechanical trading, you guys just should be a profitable trader, and you guys could have put your take profit at the next order block here. Don't be too greedy, guys. Take profit quick as possible, in and out the trade, get out the trade, guys. See that, guy? And just like that, you guys made 2 trades in less than a couple hours, guys. Just like that, guys. So like, as always, I hope this video, guys, find you guys helpful. And as always, guys, wait for the high probability setup. Don't just rush into all of these trades not knowing nothing. See this, you can rush into a trade, but it's nothing there to let you guys know. But see here, you understand market shift, market structure before you enter the trade, guys. As always, stay blessed and mind your business, guys. Mind your business.